Hey everyone, Josh Martinez here with Market Traders Institute. We're going to talk about Fibonacci's and how you can use them with day trading, position trading, even swing trading. When you first turn on your computer, what you want to do is open up your charting software and just make sure you have the Fibonacci tool. It can be known as a retracement tool or an extension tool. I'm utilizing Smart Trader charting software, which kind of makes the Fibonacci sequence a little bit easier for me. They have this really cool tool that just kind of automates the process. So I want to first show you what Fibonacci's look like, and then I'll build them for you in front of you and show you all the rules of how you can use them to enter in and how you can use them to exit, and really guide you as an investor to where you can find trades where you can minimize risk and then find opportunities where you can maximize your reward, which is basically everything you want as a trader. So let's get started. Now in front of you, this is the euro against the US dollar, and the biggest thing that you want to do is just start your Fibonacci's from where the trend initiated from. Notice here at the bottom that this is the lowest point of the trend. Now you may want to go back in time, just kind of check to see if the market actually started going up. Sometimes the trend can continue on, which is kind of frustrating. But you can see clearly the market was going down, and then there was a clear U-turn, now the market's going up. Like I said, there's this little smart button that says Smart Fibs. I like it. You go left click over the lowest point, 3, 2, 1, all your Fibonacci's are drawn. But I also understand that some of you don't know what Fibonacci's are, so before we focus in on the current trade, let me just walk you through the concepts of what Fibonacci's are, what they do, and then how to utilize them. So basically, Fibonacci's are used inside more of like a trending market, so it's very, very important that you as an investor just understand that the market has to be going up or going down. So there's really only three kind of market conditions that you're going to notice when it comes down to trading. An uptrend, a downtrend, or a sideways movement. So this is an uptrend where the market just makes higher highs and higher lows. This is what a downtrend looks like, just lower lows and lower highs. And then you also have a sideways movement, which is kind of like equal highs and equal lows. Those are kind of the three big ones. In this example, we're just going to focus in on more of the uptrend. It's going to make your life a little bit easier with understanding Fibonacci's. So what I'm going to do is I'm going to, first of all, notate that we're in an uptrend. Number two, I'm going to talk about where to get in, where to get out, where to place entries, where to place stops, and we're going to get started with the Fibonacci sequence. So first things first, once you identify the lowest point, that's known as what's an AB boundary. So the lowest point on your trend is known as the A. Typically you have like 1, 2 candlesticks to the left and 1, 2 candlesticks to the right, which are higher than the central wick low. I know that can be kind of confusing to understand, but it's very important that you do understand how to find a proper low. Then your very first high after the A, and your high is when you have 1, 2 candlesticks to the right and 1, 2 candlesticks to the left, lower than the central wick high, that's known as your B. Let me go ahead and just type it out here real quick, and I'll give you a little bit of a tip. So for most people, their middle finger is kind of like the highest point. So just imagine the middle finger is the center candlestick, and you have 1, 2 candlesticks to the left and 1, 2 candlesticks to the right. Lower, that's a high. Flip it upside down, you have 1, 2 candlesticks to the left and 1, 2 candlesticks to the right, which are higher than the middle finger. That's a proper low. So if you're ever wondering, like, hey, what is a low? Just stick your hand like this. What is a high? Stick your hand up like this. Just don't bring your fingers down. All right. So you have your A and you have your B. Now we're going to spread your Fibonacci's between the A and the B boundary. And what you have here is you have overall what's called Fibonacci retracements and Fibonacci extensions. So Fibonacci retracements are just hidden levels of U-turns, and basically they're just more of a percentage game. So back in the day, like 15, 20 years ago, many people would have to use a calculator. They'll find their low price, they'll find the high price, AB boundary, then they'll use a calculator and they'll say, what is the 0.23% or what is the 23% retracement number? What is the 38% retracement number, the halfway mark, the 50% retracement number, the 61% retracement number, the 786 retracement number, and the 86 price point retracement. And all that really means is this. Your A is going to be equal to 100, and your B is going to be equal to 0. You can kind of see up here, B, you have 0 right there, and then you have A, which represents 100. So just 23% of the AB boundary, that's a Fibonacci retracement. 38% of the AB boundary is a Fibonacci retracement, so on and so forth. Basically what ends up happening is buyers hang out here where you have, or where people expect the market to U-turn. So you have the market retrace, and traditionally the market will give like a candlestick formation at one of these retracement areas, and then you're going to buy the market. Let me kind of give you an idea what that looks like. So the market begins to pull back, and let's just say it forms a low, kind of U-turns a little bit, right at the 618, which is like the 61% retracement. Well, what takes place is traders will come in and buy the market based upon that U-turn, and they'll look above the B and look for one of these levels to exit for like profit. So above the B high, you have what's called the 1.18% or 118% of the AB boundary. You have the 1.27, which or 127% of the AB boundary, and the 1.618, which is 161% of the AB boundary. You can round it up to 162. But basically you have this A, you have this B, and just imagine this AB boundary was like 100 pips of movement. 18 pips above the B, that's the 1.18. 27 pips above the B is the 1.27. 62 pips, 61 pips above the B, that's your 61% or 1.618, okay? So again, what I like about Smart Trader is just they kind of color code everything, make things a little simpler. So again, you have your A, you have your B, market retraces, gives us some sort of like candlestick formation, and U-turn lets us know it's time to buy the market at the 618. And I'm going to hold on to my buy trade all the way until it touches the price point, my 1.618. And this is where the color code really comes into play, because your 236, your 382, your 50, and your 618 retracements all extend to your 1.618. And that's important because like a lot of traders will follow this sequence to where if you're going to buy in at those levels, this is where everyone's looking to take their exits or maximize profits. And if you're going to buy the market, you want to buy when everyone else is buying, and if you're going to close out of your trade, you want to close out when everyone else is closing out. Because traditionally, when the market hits your exit, you're going to get a pullback or like a retracement. Let's do this again. So you have a, we'll get rid of the extension, and let's just say here's, there's one, we'll get rid of this one. And let's just say the market kind of pulled back a little bit deeper and goes to like a 786 and then U-turns. Well, basically, you're just going to look to buy that level, which is going to be like your blue level, and you're going to hold on to your buy trade all the way until it touches the opposite blue level, which is the 1.27, because you're going to expect the market to retrace. So again, red goes to red, blue goes to blue, green goes to green. Again, the 2-3 retracement, the 0.382, 0.50, 0.618, all extend to the 1.618. So buy in the retracements, exit at the extensions. You have the 786 retracement extends to the 1.27, and then the 86 extends to the 1.18. I know the numbers can be overwhelming. I get it. It was overwhelming when I first started too, but you have to know them if you really want to be great at Fibonacci's, okay? Now, Fibonacci's give you entries, they give you exits, but they also give you risk versus reward. So you may want to write this down if you plan on utilizing Fibonacci's, but your stop, what I like to do is place my stop below the A, okay? Because as long as the market doesn't take out the A, the market has no choice but to go your way. Let's jump into the live market, kind of demonstrate and show you what that means. So here, once again, you have your euro against your US dollar, 1 hour time frame. The mark, you have to find the lowest point of the trend, so this is the lowest point. And you can bring in your smart Fibonacci's and just left click over the lowest point. Notice how the market follows the Fibonacci sequence, A, B, C, D, A, B, C, D. Let me do this. Let me delete this. It will start from scratch and just kind of walk you through the step-by-step process with the manual side. So once again, you have your low, where you have kind of like, you know, you look at your middle finger, look at your hand, put it upside down. See that low? You have 1, 2 candlesticks to the left and 1, 2 candlesticks to the right, higher than the central wick low. So that's going to be your A. And then your B is the very first high. Look at this. 1, 2 candlesticks to the left and 1, 2 candlesticks to the right, lower than the central wick high. That's your B boundary. You're going to spread Fibonacci's between the A and the B boundary. So we on the Smart Trader it's called MTI Fibonacci's. So we're going to spread from A to B. Now, again, here are your Fibonacci retracements. Right away, you're going to place your stop below the A. So stop is going to be below the A. And so if you're kind of like, well, what is a stop? Well, a stop's an automatic exit for loss. So let's just say we buy the market. If the market falls below this A boundary, we're going to close out knowing we're going to lose. So you can minimize, or you can control your risk, which is very important. So we're just looking for like a candlestick formation, and bingo, you can see here the market began to U-turn. Maybe you caught this low, for mechanical purposes. Let's just say you had a hunch and you bought the market because it kind of formed a long wick towards the south. You bought the market, you took the ride up, and then you closed out when the market hit the opposite red level, which is the 1.618, and bingo. So the market just hit the D. So you bought in at the retracement and you closed out at the extension. You're going to expect the market to form a high price. So you got to wait for a proper high to left to the right to form. Hasn't really formed anything yet. No high as of yet that I see. There we go, bingo, that's the high. See right here, you have 1, 2 candlesticks to the right, 1, 2 candlesticks to the left, lower than the center wick high. So that's the confirmed extension. So the extension is over, the retracement is getting ready to start. So you spread Fibonacci's, and this is kind of like the complicated aspect of Fibonacci's. You have to be able to move them. So the deepest retracement of the old AB boundary is the new A, and the high that just formed at the extension is the new B, and it can kind of be, aggravating at times because it's like there's a lot of steps. That's why I really like the automation of the smart button. It just makes everything simple, especially if you're brand new. But anyways, you have your new up AB boundary. Your stop goes below the A. You're just looking for a U-turn, looking for a candlestick formation, another long wick towards the south. Maybe you say, hey, that's good enough for me. You buy the market, place your stop below the A, and then you're going to look to limit out at this 1.618 extension. And so you just kind of continue this process over and over and over again. Look how the market goes up. It's kind of cool how it does this. And so the market should rally up to this extension and then begin to have this next pullback. So let's see. So the market begins to pop up. Notice how the market hits the actual price point, and then you have a retracement with 1, 2 candlesticks to the right and 1, 2 candlesticks to the left. So if you were to quantify this, if I were to bring in my ruler from my entry to my exit, we're talking about 86 pips. So if you're like a standard lot investor, it's $860. Not too bad considering 16 hours, making an extra $800. If you're a mini lot investor, it's $80. But let's kind of do a little bit more faster results, and let's see if we can find any trades now. So if we kind of fast forward this to the live market, and again, like I said before, instead of manually going through these one by one, which can take like literally 15 minutes to do, I just love this button. So 3, 2, 1, click. Fibonacci's are completely done. The market tells me my up AB boundary. There's my A, there's my B. I'm going to search for my C, which is the deepest retracement where I'm going to look to buy. Let's just say I wanted to buy the market now. For whatever reason, I bought the market in the direction of the Fibonacci's. I placed my stop below the A, so stop will be below the A, and then I'm going to limit out at the Fibonacci extension, which is going to be the 1.618 extension, because my retracement's within the red levels, or I have this 2-3% retracement. Let's pull up another currency pair. So real quick, let's just say Great British Pound, US dollar, very popular. Here's a 1 hour time frame again. You start from where the Fibonacci, or from where the trend originated from. So if you look at your charts, notice how this is clearly the lowest point. The market's going up. So if I just put on my Fibonacci's, 3, 2, 1, and I already have my A boundary, my B boundary. I have a retracement right around the 618. My extension is going to be this 1.618. You can see I got a big bullish candlestick here, so it's probably a really good time to buy the market as the market is extending. I place my stop. I'll make it red below the A, and my whole trade plan is executed. Now all I have to do is just press that buy button. I got my risk, I got my reward, and if the trade is to work out, you're looking at about 105 pips in rewards, about $1,000 of the standard position, not too bad. The risk is a little bit high in this one, a little bit over 100 pips, so you're kind of getting into the trade late. You can always bring the risk up, or bring your stop up to minimize the risk, which is important. But the best scenario is just try to catch the lowest point of the retracement. So you can kind of see here when the market formed some piercing lines, long wicks towards the south. Those are really the great equity management trades you're searching for. that's where your risk is like 80 pips, and then your reward becomes much, much greater to where you're getting like 140 pips in reward. Again, you can still strategically increase or bring your stop up to lock in profits along your way, but it's just important to understand that, you know, as long as the market doesn't take out the A, it has no choice but to go your way, which is a really great scenario. So, hey, I hope you learned a whole lot. I know there's a lot to Fibonacci's. It's not a one and done scenario. You may want to watch this video over and over and over again. Just understand the retracement values, the extension values. Again, if you can find a tool that can automate the process, that's the way to go. We can show you how to do this. And I know this is kind of like a condensed manner, but down below is going to be a link. We can bring you to the live market, kind of give you a little bit more details on the Fibonacci aspect, kind of give you a little bit more experience, such as like what is a candlestick, you know, how to buy a candlestick formation in the direction of the Fibonacci, how to manually place stops and limits, and so on and so forth. So hey everyone, thank you so much for the opportunity. My name is Joshua Martinez.